Charles, good morning. Todd, John, Raymond, Ted, Phil. All right, let's start. Welcome to Tradespoon in Yellowtown. My name is Vlad Karpel. I'm CEO and founder of Tradespoon in Yellowtown. Today, we're going to have a live trading room open to trade stock and options. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to visit optionsclearing.com so you understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. All right, very important. Again, going over process versus outcome. This is kind of a classical example why trading, what's more important, trying to predict what the outcome of elections or CPI will be, right? Everybody thought it would be a red wave. Everybody thought that CPI would be worse than expected, at least all the sources that I've been reading, and the opposite happened, right? Still no outcome of elections, no red wave, and the CPI is better than expected, right? So this is the main point that I would write down in a journal, right? What drives the market right now is the CPI data, right? And interest rates or perception of what the terminal interest rate will be in the future, and nothing else matters, right? It's not the collapse of the, Bitcoin exchanges or, red wave, blue wave. It's the inflation, how long it's going to last, and what is the effect on the economy. So how do you deal with this? Process versus outcome, right? Going into these events, it's very important you can be bullish on the market, you can be bearish on the market, but it's important to look how much cash you have, how many positions you have, and position size, right? If you were bullish, then it's great, it worked out. Next time, you shouldn't double your sizes because you were able to correctly predict that CPI is going to be better than expected. It's more of an element of luck as opposed to ability to predict the markets. So, but predicting, but controlling the number of position size, cash, that's important. So process versus outcome. The second one is negative visualization, right? Going through the rehearsal exercises, right? Obviously, right now, if you were bearish, I would consider, closing some of the bearish position, right? We are at 387. We are approaching 390. You can wait, right? If I have bearish position, I would wait at least we break 390. I think we will, either this week or next week, we'll break through the 390 level. But short term, we obviously again overbought. So at some point there will be a pullback. But if you're bullish and we're trading above 391, right, for next week, right, then I would consider closing some of these short positions. If you are bullish, right, we talked about this yesterday, right, two things could happen, right? We either break above 390, right, or we break below 367. There's only two outcomes, right, based on the inflation data. I'm not sure what has to. There could be other events, of course, but I'm not. At this point, probability that it'll break 367, this year, not this year, but at least next November, first couple of weeks of December is low, right? I think this is a low probability and this is a high probability at this point. But we can chop around in here, maybe early next week, right? So this did happen. The question is, how far will it go? Is this the, bulls will argue, that this is, again, same conversation, is this soft landing or hard landing, right? Soft landing or hard landing. If you think it's hard landing, right, market is capped, right? Maybe you will get to 400, maybe to 410, right? We still have, 2 weeks in November, couple weeks in December. So in the next 2 to 4 weeks, we could get to 400, 410. That would be another 390. 20 points, 410, another 5% rally, right? We rally 4% in one day, so maybe another 5% rally. But eventually, either end of the year or January, February, it will, go to some kind of consolidation and then again continue on, right? So that's, I think, my core scenario. And we talked about this for many months. So nothing has changed, and I think that's what's going to continue. That's what's going to, that's the core scenario, right? Probability of breakdown now, even with Bitcoin contagion, I think it's low, right? It's all about current interest rates. So if you're bearish, I think that's your stop level around 390, because we could get to 400, 410 rather quickly. If you're bearish, if you're bullish, this is the range, 367, that would be a stop. So if you're going long right now, you think, it was the better than expected inflation subsiding, right? And Fed doesn't have to be as hawkish or as aggressive as everybody perceived, then, I would use 367, 370 is your stop loss, right? This level is your stop level. And go to the negative visualization, right? 387, 367, you have 20 points to the downside risk. So if you're a bull and you think that the rally will continue, which is kind of my case, that's what I think, you have 20 points to the downside, right? On the $250, you can buy 10 shares of S&P, right? I would still have 4 positions. At this point, I would, maybe have at least 1 position still bearish. It makes sense. Especially if we have March position, I think by March we will have the breakdown. But for now, we can try to ride this wave for another 5%. Okay. Any questions? And then we haven't done our, again, very important to be grounded and go through the positive and negative visualizations, right? Emotional intelligence is important, so I encourage you to go through these labeling exercises. Labeling exercise, go through the breathing exercises, meditate, pray, and then, kind of scan your body and just see emotions that are driving your mood, your decisions right now. What is the underlying mood? So take a couple breath in, breath out, and then I'm gonna put down thankful. All right, I encourage you to do the same. And the market at 827, big developments. Obviously, again, it's all about interest rates, right? So you have kind of a vertical move down in interest rates, right? We talked about that this would be bullish for the market as long as the interest rates continue to go lower, 10-year, 5-year, 2-year, 3-year, dropping precipitously. TLT rallies, right? Up, 2.5%, and dollar strong pull, but broke through this important level, 109, right? So as long as the dollar is dropping and treasury is dropping, that's bullish for the market. And with window dressing and everybody's getting in a good mood, I think the rally to continue. Any questions? Good morning, Fred. Tom, good morning. Thank you for putting your name. I'm sorry, I don't see it sometimes. Raymond, do I think Apple could fly? Again, it's the same opinion as on spiders. I don't know what the definition of fly is, but obviously without Apple, market is not going to go higher. So if the market is going to go up another 5%, Apple potentially can get to 150, 155, 10% rally. Right. So far they're kind of in line, right? Apple is 4.5%, and QQQ is 4.5%. So Apple will move as much as QQQ. If I have to choose between spiders and QQQ, I would rotate into technology, right? Value stocks are already overbought. So I don't think value stocks like XLF will move as much as QQQ, right? So XLF is up 3%, QQQ is up 4%. XLF is extremely overbought and probably has a lot less room to the upside. I think you will see this mini rotation from value to the growth. Growth is extremely underperforming. So I think QQQ, SAMIs, SMH is where the price action is going to be, right? SAMIs are up 6% or 5.7%. So I would not chase the value stocks. I think value stocks, whether it's energy or banks or industrial, they're extremely overbought. They're already, at the same rally as we had in June, July. But QQQ and SMH is not, right? QQQ is far from the same rally. So with the drop in interest rates, obviously your consumer discretionary, your Amazons of the world, these are the stocks that will outperform, right? Irrelevant of their earnings, right? Amazon had bad earnings, but it's not about earnings. One thing that I'm writing documentation in my journal, it is not the earnings that drive the prices of the stocks. Earnings will have short-term effect, day two, maybe a week, maybe two, but that's it, right? It's the interest rates, right? Amazon is up 8%, not because of the great earnings, but because of the interest rates. So I would rotate into the Amazons of the world, Apples, Microsoft, right? Even Google probably, I didn't look at Google, but I assume it's up significantly. And again, what helps me in these cases, right? So Google is also up 6%. Is fear of, obviously everybody's driven by fear of missing out, including myself. Like, oh my God, I should just mortgage my house and put it all in the stock market. What stops me from doing this is kind of, again, these future rehearsal exercises. Is the bull market over? Probably not, right? Is the how much more room do we have to the upside? And how much room I have to the downside. So that's what drives my decision. Is my perception or my opinion of how much room I have to the upside, how much room I have to the downside. To the upside, okay, I have 30 points, actually 20. So I have 20 points to the upside, something happens in the market, another Bitcoin exchange collapses, another Fed comes out and speaks and say, hey guys, you're out of your mind, one data point is not enough, you need at least 2 to 3 data points. There's no change in our opinion, and the market is gonna sell off. So to the upside, you have 20 points. To the downside, you have 40 points, right? So the air is getting thin. So as you approach in the 410, instead of chasing the market and adding to your bullish positions, I encourage you to do the opposite. Add to your bearish positions and close some of your bullish positions. Right now, we're kind of just starting. So I guess there is more room, right? So I would be, I would lean toward more of a bullish side, but I would at least use pullbacks to buy as opposed to just indiscriminately chasing this rally. Good morning, Lalit. Why it's indicating red in your screen for spiders? Red. I'm not sure. Oh, red color red? I don't know. That's uptick, downtick. Uptick green, red, downtick red. How much of the short squeeze factors in today's price action? Probably not a lot, right? VIX has never been, VIX. Another thing I'm writing is that VIX and Treasury market were correct, right? They predicted, equity market sold off, they were incorrect, but the bond market, the bond guys got it right? And VIX is complacent, right? There's not a lot of people were buying puts into this event, right? So I don't think there is much of a short squeeze. I mean, there was a spike in put call ratio, yesterday, but it was short term, and I didn't think so. Capable, hopeful, thankful. Thank you for sharing. I don't know how much Senate is a bit, right? Senate, obviously it looks like, at least my understanding, that we're not going to know the results of who's going to control the Senate until, runaway elections in Georgia on December 6th. So the market doesn't care, right? Market doesn't care. I think it's clear that House will, high probability, most likely House will be controlled by red, right? By Republicans, and that's what the stock market cares, that there is some balance of powers. And I think that's all. I mean, it's probably not going to care about who's going to control the Senate. Maybe a little bit, but not a lot. Fed Harker says he favors a pause at 450. Yeah, I mean, right now, Fed will come out and say, right, somebody will come out and put some ice on this, right? Like cold plunge, right? At some point. The image of cold plunge. I go to the like Turkish sauna, right? I'm a big fan of Turkish sauna, and then after that you go in and you do something like this, right? And you plunge into this cold. But I mean, that at some point in the next few weeks, Fed will come out and say, guys, you're a little bit ahead of yourself, right? Just because one data point, CPI decreased, in October, you need at least 2 to 3 data points to change the trend, right? Just, that's kind of our key message, right? Wait for 2 to 3 data points to determine if the trend has changed. Inflation is the same thing. One data point is not enough. At some point, when the market is overbought and Fed will come out and say something along those lines, there will be big pullbacks, especially as VIX approaches 20, right? 20 has been a good indicator that, too much, right? Too fast, right? April, August, I would assume same thing is going to happen now, right? It will get to 20, it will get to 18, I don't know, 21, and then, and then this, right? Cold plunge pull. So it's coming, and that should help you with fear of missing out. That should help you with fear of missing out. All right. Any other questions? All right. Meanwhile, market opens, and it's a euphoria, right? It's a euphoria. Market is up, TLT is up, high yield is up, everything expected, right? VIX is down, value is outperforming technology, semis are up, spiders are up. Next overhead resistance is 390. I assume there will be some type of war between bulls and bears. I'm going to make an assumption bulls will be able to break above that level. Maybe not today, maybe not tomorrow, but next couple of weeks it will. Earnings season is down. Fed will speak, but next data is PCE data, right? Let's watch. I think that's, when is it? End of the month or next week? Let's see what's next week coming. Producer price index. I'm going to make an assumption again that these PPI, PCE, they will reflect the CPI. There will not going to be a big divergence, even though it's a little bit different mathematical formula, but still not a big divergence. And then what else? Wednesday, PPI, CPI, blah, 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 housing, existing home sales, Chicago PMI, quits, ISM manufacturing, FOMC announcement, Wednesday announcement, no, sorry. November 18, that's it. Okay, so PCE date, I think it's last week, last week. All right, any other questions? All right, so let's look at our my positions and see if I want to make any adjustments. All right. So I do have IWM, right? Bullish on the IWM, credit put spread. It's actually now out of the money, right? So just taking advantage of the time decay. IWM is up 4.5%. Again, I think rotating into small caps makes sense. So I'm just going to wait for the time decay. And right now, I would look at the, I would look at, Spiders is up 3%, my portfolio is up 1.5%, right? So somewhere between, if your portfolio is up 3% or 1.5%, right? I think that's fine. If your portfolio is up 6%, 9%, you probably over leverage, over bullish. We're probably approaching 390. I would consider to use this opportunity to decrease your exposure, right? To decrease your exposure to the market. But if you're 1%, same ratio. If you're up 1.5%, 3%, I think it's fine. So IWM, no changes. Let's see. I still have a spread on Mosaic, right? 56, right? Fred is buying ice cream for everyone. If it reaches 56 level, most likely it's not going to reach 56 level. So, I'm just going to wait till it expires worthless. No changes to the Mosaic iron condor. NOC continues to trade around NOC. It's kind of been a hedge. Usually, it's the market rallies, there's rotation out of NOC. But, for now, I'm just going to continue to trade around this position. So no changes in NOC. QQQ up 4%, right? QQQ is up 4%. I'm neutral. Right now, my position is neutral, right? So I do have 300 put the call, which will continue to go higher as QQQ rallies. Maybe even buy another one. I'm going to buy another 300 call. Kind of trade around this position. I think it's going to continue to go higher. $2.18. All right, so I did add to this call. Take a small risk, right? I have 300 call. I'm going to buy another one. I still think that, we probably will get close to 300, maybe 290, maybe 300, but I think it's a risk worth taking. So add it to the QQQ call. SH, I would at some point start adding to SH position. Probably not yet, but as we get close to 400, I'm going to start buying SH. As we get close to 400, I'm going to buy SH. For now, I'm just going to continue to hold in spiders. I did trim spiders position into the event. Probably buy on the pullback. Let's see. So for now, the strategy is to continue buying spiders and pullback. XLF, I have a call spread and I have a put spread. XLF, I have a call spread and a put spread. A call spread is January. Call spread is in January, and put spread is in March. So continue to hold that. Call spread is now up more than 15%. XLK, one of my largest position, right? Kind of the idea of option wheel. So I do have stock. It's approaching, it's actually at 127. So we're close to my cost basis. Continue to trim, sell calls against it and take profits. We'll probably get to 129. When does it expire? November 22nd. So I can close the 129 call and take a loss, right? Because it's up, actually almost 60 cents right now. Or, it might take some time to break through this overhead resistance. So I can just buy a call to hedge my short call. This way, I'm not limited on my upside, right? Right now, I'm limited on my upside. I sold 129 call for 94 cents. So, if the stock goes 130, that's it. There's no more upside. Right now stock is 127. So I still have $3 to the upside, but I think it's going to go further. So then I can go. So one way not to limit, but still take advantage of the short call is to do the credit call spread. So I have November 18 next week. We can break through this level. Fine. Then I have 129 call. Buy to open. Let's see. What's the next level? All right, so the next level of XLK that I need to hedge, right? So if the XLK breaks through 129, the next overhead resistance, probably 132, right? 132 short term, 132. So somewhere 132, 132. So I'm going to buy to open 0.8, 0.8. Let's do 0.82. Okay. So I bought 131.5 call. Why did I do that? Again, because I think XLK will break through this level and continue to go higher. Maybe 136, maybe 132. So this way, if I'm right, then it makes sense to buy the call, right? And if I'm wrong and it doesn't breach this level, well, I have the short call, right? I still have the short call, which will continue to lose value. But at least I'm not limited on my upside. So that's XLK. XOP, still bearish on XOP. Again, we said that one day doesn't set the trend. We did have a pretty big pullback, but obviously it's underperforming, right? And I think you'll start seeing across all of the value space, right? So still have a put spread. I think energy is overbought, just like the rest of the sector, and I think there will be more consolidation. A little bit higher, a little bit lower, but risk versus reward doesn't make sense to chase. So still have the put spread. Carmen, difference between calendar spreads and debit spreads. Calendar spreads, if you have an opinion on the market in terms of, like, I have a calendar spreads and QQQ, right? So, I mean, not your traditional, but, you know, I have an opinion that in December we can reach 300 level, and by March we can reach 250 level, right? That is my opinion. So the way I express this, I'm bullish. You know, in calendar spread, I can sell short, let's say put, right? Sell short the put in December, and then I could buy long put in March, because then I have an opinion that, you know, market will move in one direction short term and one direction long term. So once you have an opinion where the market is heading, right, then calendar spreads are better, more advantageous, right? Because you're taking advantage of the volatility moves in your short dated options, and that not the same volatility move will be in the longer dated options. So if you have that opinion that certain things is going to happen by certain time in different months, then you do calendar spreads. If you don't have an opinion, you have no idea which one is. You have an opinion that the market is going down, but you have no idea, is it going down in December because CPI is going to be worse than expected, or is it going to be in March? And then you do vertical spreads. Any other questions? All right. Let's look at some of the earnings. Okay, so any questions on the positions? Let's look at the watch list. So some of the earnings I did in my personal account, not Shopify, but NIO and Rivian, right? They're all up, but still not up 30%. We're talking about these small cap stocks that, you know, very liquid. You know, there's a lot of volume in these names, right? Electrical cars. Oh, sorry, like Rivian. But again, they're driven not by the earnings, right? After the earnings, the stock was, you know, slightly higher, maybe 2-3% higher. Now it's up 15% because the market is up. So it's not that the earnings are driving the prices of the stock; it's the interest rates. But still not enough to. Well, actually, it's getting. I think I have 36 calls, so I have to keep an eye on it. But you know, you get the point. But you know, it's still not close to my strike price, and I can probably close it. Okay. Any questions? Carmen, no problem. Any other questions? Let's see. So Amazon leading, right? Most oversold stocks leading, right? Amazon is up 10%, Apple 5%, same is 5%. Let's take a look. So materials are up 4. Home builders up 9%. Metals and miners up 4%. Energy is underperforming. Industrials are underperforming, as we talked about. TLT is up 3%. Gold is up. So currency, dollar-sensitive stocks are up significantly. XRT is up 6. Biotech is up 5. Small cap up 5. Consumer discretionary 5. So rotation into high risk, right? High risk, high beta stocks. And you can see banks are underperforming and such. Okay, any questions? Wow, yield is just breaking down. So that's good. That's good. That's a good price action. The dollar and 10-year yield are down significantly. You didn't wait for the QQQ to fill the gap. I mean, I'm buying out of the money option. There is not a lot of risk, right? It's either going to continue going higher. QQQ is either going to continue going higher. You know, I don't think it's going to fill the gap today, right? I mean, short term, the mood is very bullish, right? It's a very positive surprise. On the pullback, I would be a buyer. So if it drops to 273, I would be a buyer. It's not going to drop to 264 unless there is some kind of event. Assuming there's no other events, you know, it's heading to 284, right? QQQ is heading to 284. Maybe not in a straight line, but up and down, but it will get there sooner than later. XOP, I'm still bearish on XOP. I don't have a lot of, you know, at this point, it's out of the money. Call spread, I mean, obviously, the time is against me. I mean, I can close it for a loss, but I have 130. What do I have? I basically have 130, 120 put. I did add yesterday 130, 120 put because I feel like there's limited risk. You know, I'm risking $1.60, right? And you can see XOP is underperforming, right? 2.5%. So people will rotate out of the energy into technology, probably the next two to 4 weeks. And market never moves on the same line. So I think there is more pain in energy. I think it will continue to drop, right? You can see crude oil, you know, kind of a vertical move down, right? Vertical move down. So I think it makes sense to just continue holding. What do I have? I have December. You know, I think, you know, it's definitely building the top. You know, will it get to 130, 120? Maybe. Maybe it will. Maybe it will. CNBC market consumer this one technician said 10-year to 3.5 and then 5 to what is it? Which yield? 10-year yield. 10-year yield. He's probably right. I agree with that. So yields are going down. Yes, 3.5 looks like a good support, right? That's the previous top iteration. So 3.5, and then back 5.25. I don't know about that. I don't know. I mean, that's, you know, you cannot deduce this from technical analysis. You can only deduce this from. I mean, you can say 3.5 to 4.5, right? Move in equidistant move, right? So you moved from 4.2 to 3.5, 70 basis points. So you're going to move 70 basis up to 5%. Okay, 5.25. From technical perspective, it's possible. I agree, but it will all depend on the CPI data, right? Next CPI data better than expected. Probably we're not going to get to 5.25 ever. You know, not in the next 20 years. You know. But if it's going to be worse than expected, right? If CPI is going to be back to 8 in, you know, the November CPI back to 8, then, you know, then it's not. My core scenario that the inflation has stopped. My core scenario that the inflation has stopped, right? When next CPI data will be either in line with expectation or better than expected, and we are building the top in interest rates, right? Yes, I agree, 3.5. Yes, I agree based on, we go back to 4.2, okay, 4.6, but not 5.25. And then we're going down, right? Because at some point, then I think next year, the narrative will change, right? The CPI will consistently going down, but the earnings was going to start deteriorating, right? Right now, everybody, you look at every analyst, they still think that, Tesla is $500 stock and Apple is $200 stock. I mean, they're lowering their price targets, but nothing to reflect the reality, right? At some point, these earnings estimates will go down significantly, right? We've seen this in this earnings cycle. Next to earnings cycles will probably get a lot worse, right? So for that reason, the narrative will change and interest rates are actually going to continue to drop, right? I think this is what's going to happen. Like starting next year, yields are going to stop rising, right? Because we reach the top of inflation, right? I'm going to make an assumption that the next couple CPI prints are going to be either slightly better or within the expectations. So that means interest rates are not going to rise, but the narrative will change, right? Deflation, stagflation. Stagflation is going to be the narrative, or recession is going to be the narrative, and then treasuries are going down. So that's my core scenario, right? This is my core scenario. I mean, obviously, he could be right if if this was just one data point, and then CPI continues going higher, and the terminal rate perception of terminal rate is going to increase, then maybe we'll get to 5%. But I think it's a worst case scenario. It's not my core scenario. But interesting discussion. That's what will drive the market, right? Obviously, if we're going to be at 5%, market is going to sell off. But even in my core scenario, market is going to sell off too. It's just for different reasons, right? Are we selling off because inflation is rampant, or are we selling off because Facebook is letting go 10% of its company, and Amazon will follow, and Microsoft will follow, right? That's the argument, and something to think about as we're approaching the end of next year. But good discussion. Thank you. Todd, yes, still holding. Fred Dow Jones. Yeah, I mean, this was like just always think, I always think about this event is this, what do you call it? Spring, right? The spring was loaded, right? It was loaded, and now to the top, and now it's going the other way, right? It's going the other way. At some point it will stop. But the string was loaded. Could it go further? Yes. If CPI was worse than expected, then CPI, then we have another loaded. But market was extremely oversold. Technology was extremely oversold, right? So this, the bears pulled the string as much as they could. Now it's it's going back up. Sell short of XOP spread. Would you sell the short side of XOP spread? Or close the short put? I mean, it's worthless. You could. Yeah, the short put you can close. It's just, yeah, I mean, that's one way to do it. Todd, thank you. Todd, helps. Sure. Anytime. Thank you for your kind. Oh, I do need a favor from you guys. I do need a favor. I was, reputation, online reputation nowadays is extremely important. So somebody actually, like in Kenya, they built the site and put a bad review about Yellow Tunnel. And Google obviously picked it up. I mean, they took it off, but I'm very, obviously your reputation is very vulnerable. If somebody ever writes a bad article about you, there is a way with Google search results to dispute the results, right? If somebody is asking for money, right, it's kind of blackmailing you and using your name in an article and blackmails you, you can actually, there's a process that Google allows you to go to take that off. So if that's something like this happens to you, but the other way to, the other way is to combat this. I mean, we're only talking about the first, page, right? So if you say Yellow Tunnel review, right? So you have, more or less, some of these are not reputable sites. They're just using it to get ranking, but at least it's a fair description of the company. So I'm not going to spend too much energy on this. I mean, we do have a Trustpilot, right, that has good reviews. But you need more companies like Trustpilot, right, to push these other ratings down and away from the first page. So I will start looking for. I know you guys leave in reviews. What is it? Oh, so I know some of you left reviews on Trustpilot, right? If you can just do me a huge favor and leave the same review or alter it slightly and leave it on the site. It's called Jabber. What is it called? Oh my God. Site Jabber. Site Jabber Yellow Tunnel. John, Ted, Fred, I know you guys left reviews, but I built this site Jabber. It's a reputable site. It's similar to Trustpilot, same idea, right? But it's called Site Jabber, right? And Google ranks it very high. So one way for me to deal is to publish articles, right? Or the best thing is obviously when your customers leave review on reputable sites, right? And then even if somebody opens up a site in Kenya and blackmails me, but I'm not on the first page, well, I don't really care. Then you can open up a dispute with Google. The problem dispute with Google takes time, right? Meanwhile, everybody search for review before they make a decision, and then it comes out, and you have this, bad review. So I'm going to send it to all. Again, I would really appreciate, especially if you already left review. This is for Yellow Tunnel. If you already left review on Trustpilot, we do have good reviews. This makes my day. We don't have any negative reviews. Some of you left positive reviews on Yellow Tunnel. If you can just copy and paste your review, maybe change text a little bit, because sometimes you can get penalized if it's the same content, and leave them on sitejabber.com review Yellow Tunnel. That would make my day, and I will ask you again to do this on other sites, maybe a couple more sites. And hopefully copy and paste and changing the text, shouldn't take more than, I don't know, 5 minutes of your time. But it makes, I spend a week dealing with this guy in Kenya, paying him money so he removes this fake review, and the problem is, now next time it's going to be in North Korea, right? To build a site and leave a review, negative review, doesn't take any money, and there's nothing you can do, right? You're not going to go to North Korea and shut down their servers, right? Or Kenya. So you kind of, the only course of action disputed was Google. That takes time. Or have your clients, leave you, good reviews. John, today's what, Thursday? No, I'm doing the closing bell. Scott will do the have fun in Costa Rica. Site Jabber, yeah. So John, I'm gonna paste the article, paste the link. If you can send the review, then thank you. I put it in the chat box. Let me put it in the chat. I put it in the chat. Put it in the chat. But I can spell it. It's Site Jabber. S-I-T-E, site, and then Jabber. Can I make this bigger? So that was an interesting experience. Never dealt with that before, but I'm just surprised that Google allows you to do something like this, and they rank it very high on the first page without any, the site looks, if you run it through a scam service, it shows that, there's no names, there's no first name, last name, it's just, so you have to be, when you read the reviews, you have to be careful, right? How it looks. Let's see, text edit. Oh, here. So Site Jabber, S-I-T-E-J-A-B-B-R, B-B-E-R, Site Jabber, and then you just search for yellowtunnel.com. Thank you, John. Thank you, Carmen. Scott will do closing today. Yeah. Thank you, John. Tradespoon has been in business much longer. So, I mean, obviously, yes, Trustpilot, please leave a review. But he tried Tradespoon, it wasn't ranked on the first page. So for now, I'm not worried about Tradespoon, but you're more than welcome to leave your review on Trustpilot for Tradespoon. And you can just search for the Tradespoon on these sites and leave reviews. Tradespoon, have more reviews because it's been longer in business, and there's more articles. That was a lot more, the positive in this experience that I was a little bit, I'm actually going to write a blog on Yellow Tunnel. It's the complacency, right? You kind of assume things like this don't happen to you, and you go on by your, doing your business, and you just don't think about this, right? But this idea is that you always have to be a little bit paranoid, right? What if somebody in Kenya opens up a server and writes that Vlad Karpel, cheats customers and, and steals money, right? I mean, what are you going to do, right? So the only way to deal with this is on the first page when people search for Tradespoon, you have good articles or good content from reputable sites, then it will be impossible for anybody to get on the first page. If it's page 10, people usually don't look at it. But the complacency, stock market is the same thing. If you condition that market always go up and at some point go up, I still have friends that are not selling Tesla, right? I told my friends, I have a friend, most of his wealth is in Tesla stock. And I told him in January, listen, I get it, you're buying hold, you bought it at, $50, so it's fine. You made, $1 million, great, it's great. But what if Tesla drops 50%? How would you feel? What if Tesla drops from another 50%, right? Then all of a sudden 75% of your wealth is gone, right? You cannot, just because stock is always going up, you cannot be complacent. You can't just assume because you've been conditioned like that, it's a one-way trade, right? So complacency is an issue, right? Every time you feel complacency as a business owner that nobody's gonna, try to ruin your reputation, well, it's going to happen. It might not happen today, maybe not in 3 months, but eventually it will. Stock market is the same thing. So when you feel like you're complacent and you just don't want to do anything and, things just going to take care of itself, that's when the paranoid survive, right? There's a book, Paranoid Survive. Only paranoid will survive. So little, a little sense of paranoia is good, right? You don't want to overdo it, right? Because then you can't sleep at night. But a little sense of fear of paranoia is good when you have your own business or when you trade, right? In both cases, it's useful. Send me an email. If you do have, if somebody posts, first of all, it's illegal to use your name in URL. The way this was done is that they're using Vlad Karpel in the URL. And that's how Google picks it up very quickly. And it's illegal. So if somebody is using your name, right? First of all, ask them if they're willing to take the money, you know, because you want evidence to submit it to Google. So ask them, you know, if you pay them in Bitcoin or wire money, will they take out the review, this article or this review? If they say yes, save this, you know, take a screenshot of that, screenshot of the URL, right? I mean, Google will not be able to bring down the server, but they'll be able to remove it from the Google search results, right? And then there is a way, you know, you search how to, you know, dispute or how to, you know, take out search results from Google. Then you can go to the site, and those are the 3 steps. You know, your name has to appear in URL, and somebody's asking you for money, right? And then they will take down that content. They will take it down. Trader is a smart, or but trader, I think it's either Mark or Tim or Todd. Sorry, we have lots of traders. Okay, I'm gonna assume it's Mark. Liam, probably not Tom. Tom or Mark? Okay. Or Todd. All right, thank you. Thank you for leaving the review. It does sound real like pain. It sounds like a pain and a nightmare. You know, I couldn't sleep for 2 days. I was so upset. But then, you know, it gives you energy to start doing the right things, right? So you have to channel the negative experience into a positive, right? I would be complacent even now, but now that it happened, and you know, I spent $500. Okay, it's a $500 worth spending, because now I'm energized and I'm gonna, you know, get back on this SEO route and try to bring back the, you know, reputation. Thanks, Mark. Thanks, Mark. Okay, 917. Let's see. Tesla is up 6%. My friend is very happy. Hopefully, he'll sell some of his stock. But you know, this is a problem, right? Tesla broke through the 200 level. It stopped here, so you know, unfortunately, there'll be a lot more pain in Tesla stock in the future. But short term, big win for the bulls, right? TLT is up 3%, and you're down to 3.86. And spiders are retesting 390 level. Retesting 390 level. If you're bearish, right? If you were bearish, I would watch carefully 390 level, because that's also kind of a long-term support and resistance level. If we break through the 390, I think there will be a quick move to 400, right? So once bulls are able to push above 390, day 1, day 2, then spring will get loaded very quickly and we'll get to 400, right? That was the prediction last month from the stock forecast toolbox, 400. So I think that's the core scenario. And you know, pendulum always swings a little higher, but I think we'll get to 400 quickly. If it doesn't, then we might have a pullback. You know, depending on the news, we might get pullback to 385. So support now is 385. Overhead resistance is 390. So that's your levels. You know, if it breaks below 385, we're quickly going to drop to 380. If we break above 390, we're going to quickly get to 400. Thank you, Carmen. All right, guys. Thanks for your help. Thank you for leaving the review. You always make my day better and shinier. And thank you for being part of my life. You guys help me get in the right mindset every day. And I look forward to we have a close. Sorry, we have 12 o'clock on Yellow Tunnel, right? Don't forget. I know you guys. I'm gonna miss you. I know you guys are gonna miss me. So if you want to see me at 12 o'clock, then please register for this event. We're going to talk about short-term goals, long-term goals. I'm going to look at the earnings play, maybe do an earnings trade for tomorrow. We'll see if there's any liquid names like, Rivian, and then closing bell. Thanks a lot and take care. Starting to feel like that. You do this every day. Some of you guys been there for years. John, I don't know, John, 5 years. Angelique, like 10 years. There's some of you that been there for 3, 4, 5, 6 years. So it's great. Phil, I don't know how long you've been a member, but I assume it's been years. All right. Thanks a lot, guys. Thank you. And I'll see you soon. Thank you, Phil. All right, guys. Take care.